Washington, D.C., April 2026. The Federal Deposit Insurance Corporation, FDIC, Board of Directors on April 7, 2026, approved a Notice of Proposed Rulemaking, NPR, to implement key requirements and standards of the Guiding and Establishing National Innovation for U.S. Stablecoins Act, Genius Act. The proposal was published in the Federal Register on April 10, 2026, 91 FR 18534, with a 60-day public comment period ending June 9, 2026. This marks the FDIC's second major rulemaking under the Genius Act, following an earlier proposal on application procedures. The new rule establishes a comprehensive prudential framework for FDIC-supervised permitted payment stablecoin issuers, PPSIs, which must operate as subsidiaries of insured depository institutions, IDIs. It also addresses custodial services provided by IDIs and provides important clarifications on deposit insurance. Core elements of the proposal: reserve assets. PPSIs must maintain identifiable, segregated reserve assets on a 1:1 basis with the fair value of outstanding stablecoins at all times. Eligible reserves are limited to high-quality, liquid assets such as U.S. currency, Federal Reserve balances, short-term U.S. Treasuries, maturity less than or equal to 93 days, qualified deposits, overnight repos, and government money market funds. Concentration limits apply: no more than 40% of reserves at any single eligible financial institution. Reserves must be reported monthly with independent attestation. Redemption requirements. Issuers must publicly disclose redemption policies and honor redemptions for a fixed monetary value. The proposal generally requires redemption within no more than 2 business days, with a minimum redemption amount not exceeding 1 stablecoin. In cases of significant redemption requests, exceeding 10% of outstanding value in 24 hours, issuers must promptly notify the FDIC. Only the FDIC may impose discretionary limitations on timely redemptions. Capital, liquidity, and risk management. New PPSIs face minimum capital requirements, typically not less than $5 million in the initial period, operational reserves covering 12 months of expenses, and robust risk management programs tailored to the issuer's size and complexity. These include internal controls, IT security, including private key management, AML/sanctions compliance, and governance standards. Payment of interest or yield on stablecoins is generally prohibited. Custody services. FDIC-supervised institutions providing custody for stablecoins, reserves, or private keys must safeguard client assets separately and avoid improper commingling. Deposit insurance clarifications. Deposits held as stablecoin reserves are not eligible for pass-through FDIC insurance. However, tokenized deposits that meet the statutory definition of deposit under the Federal Deposit Insurance Act will receive the same treatment as traditional deposits, regardless of recording technology. The proposal aligns closely with rules from the Office of the Comptroller of the Currency, OCC, and supports the Genius Act's goal of fostering innovation while mitigating risks. It complements the SEC's March 2026 guidance clarifying that qualifying payment stablecoins are generally not securities. FDIC Chairman Travis Hill noted that the framework provides clarity for banks entering the stablecoin space while protecting financial stability. The Genius Act itself takes effect on January 18, 2027, or 120 days after primary regulators finalize their rules.